I don't know. I don't know.
I still don't. Even with the event, I don't get the alert.
Okay, good. We had an image with this one and everything, so we'll see how it goes. This was a nice presentation, I feel like. It's not showing up for me on my live. Hope everybody can see me, but my phone is not working, possibly. I just want to give a few minutes for everybody to get here, and then we'll go ahead and bring Charles back on, and we'll jump back into it. If you guys have any questions for Charles and you guys are sitting out there and can hear me, feel free to get your questions in, and I'll make sure to bring them up either throughout the stream or at least definitely at the end. We'll go through everything.
Thoughts on I'll ask you in the post-game show, actually.
Okay. Pre-game show chat, real show, post-game show chat.
We'll do all three.
Okay. Few people here. Give another second or so for everybody, a couple minutes, whatever, to get here, to settle. And then we'll bring Charles back on.
Looks like we got another week of this weather, and then we're going to be out of it.
Yeah, crazy. It's been more ice than snow. I don't know what it's been like for you, but it was snowing a little bit earlier, but every once in a while it just seems to hit us with a little bit more ice. There's a sheet of ice today when I was getting the kids out the door, so
yeah,
I was very careful.
We're getting both. We kids have been off more this year than, I grew up in Vermont. I think they've been off more this year than I was in my entire childhood.
That's because Vermont, they're like, what are you going to do?
It's just to get here.
Yeah. Deal with that snow. It's life. It's life and it's nature.
It's a bummer. The kids, they don't get snow days anymore.
Everyone. I did not, I don't know who that is. I'm getting a call, which is frustrating.
Yeah. The virtual takes over the snow days now. So it's instead of
I did not watch
home,
this. I did not watch this. Oh, did you watch this? Did you watch the new Truthful Mutual episode?
No, I did not.
I did not watch it yet. Okay. Let's get going. So today we're bringing back on Charles Freeman. And last week we had a little bit of tech issues, and we're going to be talking about bubbles, bears, and Bitcoin. And last time we were getting into the history and a few other things. And I kind of want to, gloss over a few points and then really start getting into, where we think we're going with this market, where we think we're going, how it ties into the economy, and then get into cryptocurrency. I did not watch Truthful Mutual yet, but we will get to that after this show. So without further ado, I'm going to go ahead and bring Charles back on. And here he is. How's it going, Charles?
Well, you didn't even do the intro today. Just jumped right into it.
Oh, yeah, dude, I completely forgot. I don't know how that happened.
Hey,
Charles, you want to be part of it? You want to be part of the intro?
Sure.
Awesome, man. Let's go. Love that intro.
That's good.
How long does it take you to do something like that, Corey?
It's a few hours.
Okay. Cutting and pasting all those videos and putting them up, and obviously
resizing
the words out there and stuff. Yeah. Cool. Love it. So obviously we have on Charles Freeman, and last time, I'll give you a quick introduction, Charles. Principal of the AdaptFirst initiative and owner of an RIA, and is also a CFA, and really has starting in the tech bubble, has a ton of experience with watching the economy, seeing how these things go, watching the stock market. So I really wanted to get somebody with that much experience and that much knowledge on the show to talk about some of these things that are going on. So Charles, with what we talked about last time, why don't we jump in real quick and just kind of discuss where you think we are with valuations and where that could lead us in the future?
Yeah, one of the things, a question last week that you asked me was, what are some of the signs that I'm seeing that are make me, think that we're in a bubble, and that kind of confirm that. And I talked about a little bit about valuations. I mean, valuations across the board are just extremely elevated. And but the challenge with valuations is things can stay overvalued for a really long time. We actually saw a similar situation in the late '90s, exactly kind of like we're seeing now. And one of the things I thought about after the show last week was one of the arguments that has sort of been thrown out there is that, well, last time in the late '90s, like there was all of these tech companies that they didn't have earnings. That, it was just incredible speculation, and it's different this time. Is that tech is not the same as it was in the late '90s, and for sure, I would agree that there are a fair amount of the, especially the mega cap tech companies. I mean, they're printing money themselves, right? Their business model is so good. They're leaders in the industry, and that is definitely the case. But it was really interesting that over the last 8 months, and I think I posted about this maybe a little while back, but over the last 8 months or so, the number of non-profitable tech companies, like their stocks have just surged. I mean,
Is that what you refer to as zombie companies?
no, different than the zombie companies. The zombie companies are basically companies they have so much debt that they can't even cover the interest costs on that debt. So, I mean, effectively they're just continuing to lose money, and the only thing they can do, is just trying to keep, financing it more and more, even though they can't even pay the interest. So it's like, how long do you allow these companies to survive? And like 25% of the Russell 3000 would be classified as a zombie company at this point. So, I mean, that's obviously very disturbing. But it was interesting, the chart I saw on Bloomberg about the non-profitable tech companies, because I think it kind of highlights, the speculation has just went into orbit, over the last 8 months. And again, that is very similar to the things that I saw in 1999. And you could even argue 98. I mean, there were some of those things then as well. So, I mean, the hardest part about it is, like, we could sort of recognize we're in this like hyperinflated and bubble environment, but the question is how long can it go on? And to me, there's been things like, I would have thought, really, like, kind of the economic damage that COVID did, I mean, is really, it goes back to the Great Depression. I mean, it's pretty amazing. And even
Charles, do you
Yeah.
think with the obviously this is an obvious answer, but with the stimulus in there, how difficult would it be to use these valuations and figure this out? And especially since '08, took us into a 10-year boom, which I imagine, 10-year bull market, which I imagine had a lot to do with the stimulus payments that came in, among other things. What's to say that doesn't happen again? What makes you fearful, I guess, right now that we're at that tipping point?
Well, the main thing is, the big fear coming out of '08, '09 was that, the QE and everything that was launched, that would have caused massive inflation, and we didn't have it. And I think part of that was counteracted by some of the stuff that was kind of going on behind the scenes, like with increased bank regulations, and sort of fiscal conservatism, during that time. And so it sort of offset some of the massive monetary things that were going on. And I think that's different. I think that is different this time, because now you have not only the Fed that is, has gone all out, obviously, but you've also got the government doing that too. And that's what we didn't have sort of back in, 10 years ago. So I think the combination of those things could really be, and on top of some other things, could really ignite inflation again. And that would that could potentially pull the Fed off of their hyper accommodation, phase. Because if you think about influences on inflation, I mean, you've got, expansion of the monetary base, things like that. But you've also, and low rates, obviously, but then there's also supply issues where, if supply chains, if there's a real argument that can be made, I think, given what happened with COVID and our dependency on China, a lot of people are talking about supply chains changing, and with the protectionism that's out, really across the globe, looking at a situation where you're not always going to that lowest cost producer. And that globalization trend that's really occurred over the last 30, 40 years, I'm not saying it's going to reverse, but even if we saw a change there, then what you're basically talking about is, supply costs going up, and then that gets pushed through to the consumer. Is the company just going to eat those costs? Well, they might eat some of it, but again, they're probably not going to eat the whole thing. Higher taxes is also another cost push influence on inflation. So I don't think there's anybody that would disagree that we're, given the amount of stimulus that we've done, given that, the Democrats are in full power, I think, a lot of people are starting to say, higher taxes is coming down the road, and don't know what that's going to look like, but certainly, we could see that as a contributor. So I mean, from the demand side, as far as demand, it's called demand pull influences on inflation, and then cost push influences on inflation. We might actually see, inflation start to take off again, and it could be meaningful. I mean, I saw a Wisdom Tree blog the other day, and Jeremy Siegel, the guy referenced, and he's like Siegel's like a perma bull. He said we could see inflation at 4 or 5%. I mean, if aggregate inflation got to 4 or 5%, I mean, that would be pretty crazy. I don't,
what was inflation in 2008 after quantitative easing, I guess they call it, and what's the comparison now of jamming this much money and making this kind of feeling like an artificial market? Well, what's to make it happen this time?
Well, I mean, I think it's just a combination of all those things, right? I mean, I think that's where it's almost like this sort of perfect storm for inflation to really start to happen. And
you think this problem started like 10 years ago?
Well, I think that I think Bernanke absolutely did what he needed to do to get us out of 08, 09. And I think that there were extreme measures that needed to be taken and were taken. The issue, I think, going forward over the last decade has been the Fed has not had the courage to sort of pull back and allow rates to normalize, even as we got a pick back up in the economy. I mean, every time that we got a little scare about anything, the go-to was, hey, we're just going to drop rates again. And
we've been hearing that we haven't paid the piper for 08 for probably 7 years now. That's kind of been an underlying theme, right?
Right. And I think that's exactly right. And I think what it's done is it's emboldened investors to really just, in a way, deify the Fed and say, well, it doesn't matter what happens in the world. They're just gonna bail us out. And I mean, and COVID's kind of the ultimate example of that, right? I mean, we had the largest economic shock since the Great Depression, and the Fed comes in with this bazooka, and basically the market just completely ignored all of this data, and continues to do that. And I don't
want to interrupt you. I'm going to, but I want to get questions answered towards the end here, but there's a lot I want to get into with you, Charles, and I know Ryan does as well. One of the things I want to ask you is, you were feeling that we were in a bubble pre-COVID, right?
Yeah, getting there. Yeah.
So a lot of people I've heard from advisors saying that had shared that sentiment, January, February last year, even feeling like we were overvalued and that they were pulling some risk off the table. Now, folks who did that have, they watched COVID, they watched the total drop, probably felt like they timed that thing properly. And then this thing's run up again. How do you coach people, or how would you advise people on the FOMO as they maybe have reallocated themselves to be a little bit more conservative and they're watching this thing continue to roar? Where should people be in as they have this fear of missing out?
Mm-hmm. Yeah, I mean, I think that's one of the hardest things about it is like, what do you do right now? And I think you have to be really selective about where you're going on your equity selection. I mean, I do think that we're probably in the very early innings, back into a rotation for value, because if you go back and you kind of look at that period after the tech bubble crashed, from like that 01 to like 07-ish era, value relative to growth just really outperformed. And so the idea that we could, coming out of this, economy and as industries start to, ramp back up and we do start to normalize, I think that's one of the things, some of those industries, some of those value industries, and especially like with rates, if we are starting to see rates go up in a meaningful way, I mean, financials, certainly could benefit from that. So I think, all equities, in my opinion, are like hyper elevated, but probably from a relative value standpoint, the value sectors could be a little more attractive, as the speculation has just gone off the charts with growth.
So it's not just a sideline kind of thing. You're saying that there is some places that people could participate in the market still.
Well, I think that's the thing. It's like, so we have these two gigantic forces because, the Fed says they're not going to do anything. They're not going to change anything until they get unemployment back down. Well, that could be a pretty long time, right? So it's going to be something would have to force them off of that. And at the same time, you've got this like bubble type situation, that it could, we don't know what could pop it, and inflation possibly could, but we don't know. So you have this kind of, like you said, I mean, it's like, how do you sort of navigate trying to participate without taking too much risk? And so I think that's one of the things is, so one, maybe looking at value, two, looking at possibly going overseas, international and EM. I mean, what we saw last year was a break. There's been about a 10-year up move in the dollar. And so when I charted that back and when you saw that, well, I should say, so it's gone up and obviously the US has really outperformed. When it broke that downtrend and it was declining, and again, that 2000 to 2007, 8 era, emerging markets just trounced the US from a return standpoint. So, I mean, I think with the dollar sort of breaking down, and there's a lot of, headwinds for the dollar, obviously with the debt and everything. I think, looking outside of the U.S. could also provide some opportunities. The one caveat is, as we've seen in declines of the last, years, and I mean, even going back to 08, 09, markets are so sort of coordinated now that when the momentum does shift and things start to sell, correlations just go to 1. So, I mean, it's almost like, they're hitting the button to sell everything, and, and that's what happens. So it's a lot harder these days to get diversification, especially than it was, 20 years ago or even longer. So you kind of have to measure it by that as well. Like, knowing that just because you're in value, if we get a really change and like people start to question about whether or not the Fed can kind of keep a hold of this thing, I think correlations go to 1 and they'll go down 2. So
Ryan, do you want to get to some of these questions and we can dive into some Bitcoin stuff?
Yeah, one thing I wanted to ask you too is it sounds like with correlation, everything, a lot of people I think are more just stocks and bonds, mutual funds, ETFs, simple individual stocks possibly. Do you sit more on the line of Ray Dalio, where you have a portfolio that's I guess touching all the areas you feel where you're always measuring for that downturn? How do you feel about his portfolio, especially that he shared in his book?
Yeah, I mean, I think that I think it's important to really look at, I mean, the concept of, like the 60-40, type of portfolio is that, I mean, back in the day, it was like, okay, stocks and bonds. The bonds are going to give you a little bit of income, and then they're going to also provide a volatility hedge, for when things go down. But I mean, with rates being at zero, if rates are going to be going up, bonds are going to be going down. So not only are you not getting the income, but you have a pretty significant principal risk, if that's what you're doing. So, I mean, there are things I think in fixed income that you can kind of mitigate that a little bit by keeping duration short and doing, floating rate type stuff. But, also trying to find other asset classes to help with that, volatility. So, I mean, what I do is certainly looking at some commodities and precious metals, and then looking at certain currencies that could provide some diversification. So, I mean, I think that's a good idea, and it's definitely out of the box from sort of a normal strategy. So, trying to explain that to clients, and just to try to get them, to understand that.
Or at least get them to understand that you understand.
Right.
Because you're going to be like precious metals, and it's going to be like, like, what do we talk? Like, they probably just think of a metal chair in their garage or something, and like, this is what I'm investing in, precious metals.
Yeah, I mean, that's one of my biggest issues. It's like, my girlfriend is like, just, you got to stop using jargon, and she's like, you lost me like 20 minutes ago. So
yeah, you said EM. What's EM? You're like, oh, emerging markets. They're like, okay, good. What's emerging markets?
Right. That's right.
All right,
Brazil,
let's get into some of these questions. Here's a long one from Anthony before he jumped out. I'll go ahead and read it quickly for you. What would you, Charles, say to a Josh Brown who says that the PE was relevant when guys with bow ties were running in the industry, and PE is less and less relevant because of the exponential growth potential companies now have?
To say that,
I guess I should leave that up.
Yeah, I mean, exponential growth, I don't know that I can sort of buy into that. But that's what people say in a bubble, right? That's exactly what we're talking about. Because that sort of comment, if you look at historical bubbles, that's exactly the kind of commentary you find. And it's like, oh, it's different this time. I mean, and again, the 90s was a perfect example of that. So, I mean, to me, I think if you study history, market history, you find those similarities, and they say, history doesn't repeat, but it rhymes, right? And I think that's the thing that we're seeing now is that, absolutely PEs, and to the point, it's not that PEs are irrelevant, but it's just that PEs can be challenging in figuring out, when things are gonna end. I mean, the way I look at a PE ratio is it's actually a market sentiment indicator, because the fundamentals are earnings, right? This is what companies are earning, so it's a basic attribute of the company. Price is basically what people are willing to pay for that, without $1 of earnings. So you can, the narrative of future earnings is baked into that. As well as any other factors about the company itself, the management, or new products that they have coming out or whatnot. So, I mean, in my studies, I mean, I've seen that where when you have expansion between the price and the earnings to certain levels, whether it's up or down, you get that reversion back to the mean at some point. I mean, price, there's never been a situation where price just continues to go up and up and up without reverting, to the mean. Now the average can certainly go up, over time. And that's one of the things we actually saw in the late 90s, is that you saw the average PE, go up during the whole tech boom. But eventually it got to a point where, the irrational exuberance got to a point at where people were like, what are we doing? Like, why are we paying this much? This doesn't even make any sense. And then that's when, you get the reversion back to the mean. So I mean, I think you can make those arguments, and I think looking at stuff like, the zombie companies and like how many companies are zombies now. I mean, that's like a data point that says, are we getting close to that? Is it okay for us to have, maybe it's okay for us to have 25% of the Russell 3000 as zombies? What about 30%? What about 50%? What about 80%? At some level, do we get to that point of where, what are we doing? Like these, so I don't know. I mean, I don't believe.
Charles, how much content have you made around the zombie, this idea of zombie companies?
How much content have I made about it?
Yeah.
I feel like I've been seeing a little more, but I feel like I also see it more in comments. But
the answer should be like tons, because this, I mean, graphics and you telling this.
Yeah.
I mean, I'm just taking you on a marketing journey here, but geez, oh man, like you could go crazy with this.
Yeah, that's a good point. I hadn't really.
Wish it was Halloween. Wish it was October.
But yeah, I should probably do that for sure.
Especially that what you just said. When does it stop? When does it happen? That's everybody's question. But what you're alluding to also is that the variable that we can never pinpoint is time. So it's when you see these indicators, how quickly or how slowly do you adjust, and to what capacity? And I guess for you, that would have to change over time as your opinion changes. You see data one day, you see data 6 months later. That's 6 months more data that you have to make another decision. How often are you changing during a time like this when you see a bubble forming or what you consider to be, a downturn coming?
Yeah, it's a good question. I mean, it's hard because, at the end of the day, I mean, I've always been a fundamentals guy. And so I will tell you that the last year has been tough to reconcile, because we've had such a disconnect between a lot of these, fundamental data, between the economy and companies, and you're just like, how is this happening? So I think, I've actually tried to incorporate more of what the trend following guys do over the last year, because what it's really reminded me of, which I think I was too stupid 20 years ago to really understand what was going on with sort of the late 90s. But it just shows that, I mean, I think now at the end of the day, I mean, price is the sort of final arbiter, and sometimes you can't reconcile what the price is doing, but it is doing it. And so you have to sort of be, more respectful of that, because if you're not, then you get farther and farther away from, maybe where the market is. And that could be, issue. Then issues start coming up with your clients. Like, I'll be honest with you, like I've had, some of my personal clients have been critical because I've been more conservative over the last year. But
and they hear about their neighbor who's in the S&P and backed at the new highs. Yeah.
And I told, my comment to them was, well, one, I'm not going to gamble with your life savings, and I've got 50 charts that show you why this market is basically a casino right now. And so if you want to gamble with your life savings, you can make that choice, but I'm a fiduciary, and I'm legally bound to do what's in your best interest. And I can't honestly sit here and tell you that you should risk, take this kind of risk in this kind of market. I mean, I get it, but I mean, but yeah, so I've gotten a little pushback from a few clients, not many, but some
But I'm
about.
sure it's retirees and things where you're like, you're taking distributions or you're worried about access to the money. And this isn't more of a conversation for somebody who's probably in their 30s, who's just plugging away into their 401k and things like that. That would be my guess. Is that normally who you're having these conversations with?
Yeah, I mean the retirees. I mean, it's really like that's the biggest deal. It's interesting though because like on a lot of if you fill out an investor profile, and I've kind of designed mine to ask some questions like that, you actually get a fair amount of younger people that if you're like, okay, well, if the risks are high that we might be in a bubble and we might be due for a crash within the next 12 months. What would you do? Hardly anybody says, hey, I want to just go all in and, push all
Right.
the chips in, right? I mean,
Yeah,
it's
yeah.
like, I think people are, I mean, if they're concerned, they want to make good decisions. They want to make, decisions based on, research and historical trends. They want to have a foundation for making a good decision, and that's what I think has been tricky about this market is that when you've looked at a lot of the things that I've used and have used in the past, they're almost like they're broken because again, the market is just looking past and completely ignoring a lot of this data, and they're just saying, well, the Fed's just gonna, keep propping this thing up, and so and that's what they've done. I mean, so far. So I think the big question going forward, Corey, to your point earlier is, how do you? Is there anything that can knock the Fed off of what they're doing? Because I think if investors in the markets began to question the Fed's ability to hold it up, and the economy maybe can't recover as fast. We've priced in a lot of recovery already. But if the market doesn't feel like, the Fed is there to basically hold everything up, then that realization could be a nasty, as far as a downturn.
I
See
have
what I mean?
something too that can lead us into crypto as well, Bitcoin, all that stuff. Which is, I noticed the good and the bad of of March, I would say, of the downturn, which would be that a lot of people I've been talking to, especially younger or anybody really, I think remembers '08, and anybody who's young enough or learned it, there's a lot more information out there now where I think people were looking at this like an opportunity. So that's good. I think there's a lot of people investing more than usual, but I also see free-willing buying of just company that went down, company that went down. This went down 50%. This one went down 70%. Airline, this one, because this is going to recover. You're just doing the math from the top to the bottom. And then I would say bad in terms of where they might be emotionally when half their money goes away because they picked a company that fails eventually without picking something they believe in or knowing why they have it or whatever. So I think it's going to be a mixture of good. And the only reason I say that is because I've talked to people directly where I say, this is all individual stocks. And I'm not saying good or bad, but I can see where you're picking from. How would you feel if this got cut in half? And they said, well, I'd be extremely nervous. And I said, well, that's a conversation worth having because this is the place where that could happen. So I just, again, good in the long run, I really think, but I guess bad in the short term. Should what you say actually happens, I think is going to punch a lot of people in the face.
Oh yeah. I mean, I had three calls this week of, younger clients that had stock tips, and they were like, well, what about this stock? And I pulled the chart up in Bloomberg, and the stock's gone from like 25 cents to, $2 in 2 months. And I was like, oh my God, this is like exactly the kind of stuff that was going on in 99 where, I mean, everybody, was a stock expert, and it was like, oh yeah, this biotech company is going to solve Alzheimer's, and they had a good, trial, and 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 that's why the stock popped. And I mean, I've been through 2 bubbles now and 2 crashes, and it's just amazing how that kind of sentiment changes, because like we're literally in that euphoria phase again. And I remember distinctly back in 2001 and 2002, where I was sitting in my office for 2 years, and the market basically died. I mean, nobody wanted to talk about it. Nobody cared about it. I mean, the markets were pretty flat, and stocks just weren't moving at all. So I mean, it was just fascinating how just 2 years before you had this like crazy euphoria where everybody's trading all the time, and then when the crash happened, I mean, it was just like the life got sucked out of people. And it's like I said, it took years for that to start kind of, and it was the housing, bubble that kind of started picking things back up, and went into '07. But yeah, I it wouldn't surprise me if a very similar thing happened this time around, given what I'm seeing again.
Let's jump into crypto for a little bit here. I mean, selfishly, I'd love to know your thoughts on it. It's obviously, just using Bitcoin as an example, we could, I'm a novice here, but I could argue that run up has been ridiculous from the fall in 2018 to what has happened now, with the price being at $53,000 per Bitcoin. Where are we in that environment? What are your thoughts, high level? And then let's dig into that a little bit.
Yeah, to be honest, it's really fascinating to me that people can think that Bitcoin is like a conservative investment. Like, it's literally been tagged by people, and I've seen this even on Bloomberg, is that people are looking at it as a defensive or
like a hedge,
or a safe haven.
Yeah.
Like, are you kidding me? Like, that is crazy if that mentality is out there, but it apparently is.
So let's play that out for a second before you go any farther.
Okay.
Equities, we have a correction in equities. That first week is usually hysteria, or the first 2 weeks is hysteria. Is there a flee to cash from Bitcoin holders, or is Bitcoin being held on to as, like Ryan says, the hedge, the gold, right? The secure investment at that point?
I think I mean, if you look at it, I mean, from a correlation standpoint, I mean, it's very similar to equities. So I mean, like, I think that people would, if we start to get a correction, the speculation, goes down, obviously, and so that's where I feel like, it would come down because of that, because people would be speculating less. So I don't think that there's a real justification as it being a safe haven asset, in my opinion.
You say with market crashes, Bitcoin crashes with it?
Absolutely.
Charles, one of the conversations I've been having with a family member about Bitcoin is, as they push it and are a big proponent of it, and I'm just playing devil's advocate with it. I don't see Bitcoin being like, I always buy things I believe in and things that I can use and things that are tangible to me, because then I feel like there's, I at least can believe in what I'm doing. Until I see Bitcoin being used as a daily currency, like, I struggle to understand how, folks are buying into an idea right now, is what I kind of believe. Like, I get it. Tesla and Elon Musk are talking about it, but like, until you and I are making an exchange using Bitcoin as a currency, that's not something that is anything other than a theory to me. So what are your thoughts about that?
Yeah, I mean, I would absolutely agree with you. I mean, I have not been able to get behind, Bitcoin for that same kind of reason. I mean, currency by definition is a store of value and a medium of exchange. So, when the first Bitcoin first came out, it was like my big question was, so who's backing up, who's justifying that value? and they were like, well, it's the supply and demand and things like that. So I've had some of the Bitcoin guys kind of, send me all these links about trying to, rationalize it. But at the end of the day, like the dollar is valued at $1 because of the government, but more deeply, it's because we as a collective people, are value it that way and are okay with that. And the government has the taxing power. So I mean, like, that's where I struggle with a lot of these, these digital currencies, is that you don't have that authority back there to back it up. And to your point, I mean, it's not really a means of exchange on a broad basis at this point. So that's why the entire it's speculation on an idea that, I think where I've said there is value, excuse me, is I think there could be value in the blockchain technology, and some of the tech that's kind of backing it up. And so what I've always kind of thought would probably happen, and they're actually working on this, is, you get a country and they're like, okay, we're going to develop, a digital currency based off of blockchain, but, we're going to be, again, the backing authority for that. And I mean, and I think that as soon as that happens, and I think it will happen, I think all of these other, Bitcoin, Ethereum, Dogecoin, all that stuff, I think that vanishes like overnight, because, why would you need it anymore? So, yeah, I just can't, I mean, and again, I mean, most of the money that I manage, personally is for, my family members and family friends and people that, they're entrusting me with their life savings. And so to try to, recommend something like that, I just can't see it. It's not that I'm not willing to take risks, because, I am. It's just that to me, it's like, poker versus, roulette or something. I like to make investments where I feel like the odds are in our favor, and the odds are in our favor because of, XYZ. And the more I can build that case, the higher I think the probability is that investment can be successful. And so, with something like, Bitcoin, I can't even list any reasons, that I think it would make sense. So,
So without that rationale, without those fundamentals that you would use to evaluate the equity market, are you saying that the run up is purely like, I mean, I don't want to pin you here, but is it based on like FOMO?
Yeah, I think a lot of it is. Yeah. I mean, and there are certain companies, like I said, like a lot of the mega cap tech companies, without question, they've benefited, the transition from, everything going online. There are companies that have benefited from what's happened to COVID, but on a broad basis, I mean, if you look at like bankruptcies, and I mean, bankruptcies are already tracking higher than what they were in 08, 09. And I don't think we're done. I mean, given the amount of debt that's out there, and like, again, the number of, zombie companies that we're seeing, I mean, we could see, bankruptcies continue to potentially accelerate this year. So, there's not, the argument, I think, kind of is, well, everything's kind of, the Fed has kind of propped everything up. And if you think about it from a price earnings standpoint, okay, well, the earnings will get back there. We're going to, everything's going to kind of get back to normal over the next 2 years. And the funny part to me, I mean, and it's probably not funny, is actually, if you think about that concept, you're like, okay, so basically what kind of precedent does that set? So we're basically kind of saying there is no more business cycle anymore, that all we have to do, if we get into a situation where, we run into a recession, we can just print money indefinitely, and then eventually things will, and there's no consequences, and eventually things will get back to normal, right? I mean, that's what we've done over the last year. Okay. So are there consequences? Are there going to be consequences?
Yeah, the
for
price
that?
of milk will be $12 a gallon.
Right. I mean, like, and I think that's where, again, if you kind of look back in history, I mean, it's not like central banks have not been hyper aggressive in other places and other situations in the past. It's never worked out well in the long run. So, I think there are consequences for, what we're doing, and the Fed's kind of in a corner, because it's like, how do they unwind all of this that's been done, and they don't create a crash themselves? You know what I mean?
The really crazy thing is what you're just alluding to is these guys all have men and women. They all are in their jobs, right? They all work in Washington. They work for the Fed. They work there. They don't want this all to happen on their watch. So if they can kick that can down the road, I don't know.
Well, that's why
Not my problem.
We have a
That's why-
place sitter CEO issue where they're
Yeah.
thinking playing short term in terms of, please the people, please the board, and get my pay and kind of move on.
Mhm.
While again, while you said it though, Charles, sometimes these things seem to need to happen. You say they do what we need to do versus imagine the turmoil we would be in otherwise. But there's something happening that seems to be that there has to be some dark cloud forming, right? With a storm to go with it, or we'll just keep printing money and just keep doing it. And it becomes this artificial market where me and Mitch Goldberg had a conversation earlier, which was if every time the market crashes and the Fed sticks their foot in the door before it closes, when does all this become real or not? And I think we're all wondering that together.
Mm-hmm. Yeah, I mean, to me, it gets to a point where, are we really even in a capitalist structure anymore? To where you basically got, I mean, at some point, does the government just control everything? I mean, is there a free market right now? I mean, I think that's kind of an interesting question to think about. And
that's a really good point. The amount of money that they're pushing into the system because the system itself isn't creating it really does swing heavy in their favor. And while I always thought of that as a general concept, I never thought about it like that. That's a really good
making
point.
a point. Now you're making a case for crypto again.
Right.
But
Yeah.
again, to your point, into that
Go
too,
ahead.
Charles, I don't want to backtrack all the way, like go back too far, but to Bitcoin, when you said Bitcoin, or let's talk about crypto and blockchain in general, you said crypto or Bitcoin would go away one day eventually if countries started creating basically their own digital currency, similar that they do their own dollars and things. So what do you think would cause that? Why would Bitcoin go away? It would be that third party money that people don't care about, because then they would only want the country backed digital currency, obviously.
Yeah, I mean, I think so, because it's almost like modern monetary theory, and I don't know. That's another rabbit hole to go down. It's like, a lot of people are advocating that, saying that it really doesn't matter how much money we print. In theory, there's a lot of theories, and like Bitcoin to me is like Corey said, it's like an idea that people are sort of buying into. And on the one level, like a theory sounds really good. But then on a real level, on a practical application, like if it really starts to happen, then there's all these sort of unintended consequences, like, oh, well, we didn't realize, this was going to happen, or that was going to happen. And so I think that's where, I look at something like Bitcoin to say, yeah, I mean, people are sort of all hyped up about it because this is idea, and it seems like it's this, alternative that could really work.
And big banks have started to accept it. Isn't that correct? Like two big bank. I think didn't banks or somebody to accept it? Somebody big. I forget who it was. But I mean, also you can buy it through PayPal now. You see companies start accepting it as payment. So I think what also happens is, like, when corporations start jumping in, everybody starts looking over, because I think when that starts happening, even a little bit, it went from 30 to 50. So I mean, the idea of watching Bitcoin go up, I think, is, like you said, it's whether it's FOMO or. And I think what everybody's society is wondering is, if we all decide to use this, does that make it valuable? Does that make it more tangible?
The thing that I think is so interesting, which Charles points out, is if we had a transaction right now, and Charles, you needed to pay us $1,000, I would take $1,000 from you in the form of Bitcoin. I would not argue with you about that. The difference is I would cash it out when you gave it to me. I wouldn't hold that Bitcoin anymore. And I feel like even if a bank accepts Bitcoin or whatever, like if we transact with it, I think many of us would probably rather convert that back to cash than hold that digital asset right now, because of what you're saying is there's no fundamental to it. It's kind of a, it's smoke. So that's kind of where my head goes with it.
Well,
leading with yeah. Oh, go ahead, Charles.
The thing that I struggled with is like, when the first sort of big rally that they had, and where some of the exchanges got hacked, and it's like, or people lost their pass key, and it's like, I had $1 million of Bitcoin and I can't get into my account, and they're like, sorry, like, like how do you reconcile that? I mean, like that can't possibly work on a large scale, like to be a medium of exchange for a country. Like, I don't think those are issues. I think that would have to be figured out. There's got to be some sort of protocols there. And so then again, it's like, how do you work out some of those issues? And that's where, I think having an authority backing, a digital currency can help mitigate. I mean, to me, I think some regulation is important, because, I mean, just left completely unchecked, I mean, that's part of the issue why we've had bubbles in the past. I mean,
look at advisors.
Yeah. I mean,
the world would be a terrible place, I feel like.
I mean, just thinking about the real estate bubble, I mean, like, one of the things that we saw was like, the lack of regulation, created this massive, bubble in real estate. I mean, and so I think that it's a balance. I mean, and that's where, kind of going back to our question about, with QE is like, to me, one of the people, I hate to say to blame for kind of one of the things that I think is not a great precedent was Janet Yellen, because, Janet Yellen kind of took over the reins and things were getting better. I mean, we were recovering, unemployment was coming down. I mean, that was the time to begin, normalizing, from all this incredible stimulus that had been dumped to get us through the 08-09. And her unwillingness, because, to Corey's point, it's much more attractive to kind of kick the can down the road and let it be somebody else's problem. To me, that has emboldened investors to just demand more and more monetary stimulus. And so now we've gotten to this point where, I mean, it's like a drug addict, it's like we're sort of strung out on, monetary stimulus. And if it ever goes away, then what happens? So that's where I feel like, looking back, I mean, she was kind of a key person in my opinion. And we've kind of gone far down this road now. So
let's see if we can get Zach's question up here. Right?
Yeah, I want to throw Zach's question in, since it was, especially being Bitcoin related. What do you think the current trajectory of Bitcoin rally compares to the rally of late 2013 and 2017? What's the same and what's different from your observations?
I'll be honest with you. I mean, I don't really follow Bitcoin super closely. So I couldn't, tell you about the comparison as much. I think probably the main difference, though, is that the time that it's been around long enough now to where more people know about it. So, so that's one thing.
They remember that spike.
Right.
So the crash happened, but they remember the spike. And I think one of the things too, I'll let you finish, is that people keep talking about crypto and Bitcoin as the replacement of the dollar right now because of the value of printing money. So I think people look at that as the savior right now for that reason. I think they believe that if equities crash and the dollar's crashing, Bitcoin goes up because it's the currency that the band-aid at the moment, I would say.
Yeah, that's exactly right, Ron. That's what I was going to say. Is I think this idea that Bitcoin is a safe haven and that fiat currencies are worthless, and we need an alternative. I mean, that idea has become very pervasive, and I think is fueling the speculation even more. So so that's the question is, okay, when it turns, what could turn it? I mean, it's almost like equities in a way. It's like, okay, what could change people's minds about that? I mean, and is there anything? So
if Bitcoin crashes back down to 1,000, are you looking over at it?
Yeah, where's the buy?
Are you like, well, just because it has the capacity to, and then playing with it? Like, what makes Charles Freeman excited about Bitcoin? It sounds like you're watching it now just because of all the questions you keep getting about it. Is your eye on it now, or are you kind of like, prove yourself to me, and then I'll start paying attention?
I mean, really, for me to, the point about if more and more people start to accept it as a medium of exchange, then that starts to, make me question, okay, how realistic how realistic is it that this could be a longer term investment and a real and not purely speculative, right? Can we potentially integrate something like this in society in a way that makes sense, and it could be beneficial? So I mean, and certainly I think with more and more people accepting it, that's a start for one. And I would also have to get my head around, the way, it's created and all of that. And I'll be honest, I haven't spent a ton of time going down, doing that research. But if it become more and more common and used, then I would do more work to make sure, I felt good about, okay, I mean, what's the difference in, the government printing, just money like they're doing now, and people just mining more and more Bitcoins, like, you know what I mean?
I've got a fun one for you, Charles, and where your CFA mind goes with this and how you evaluate everything. Do you have moments of like on the more on the human side where you're like, I don't know, this thing's running, let's toss $5,000 into it and see what happens? Or is every decision you make, does it follow that, your professional kind of financial analyst framework?
Yeah, I mean, there are definitely moments where I can kind of have that, but it's still, man, I'm hyper analytical and like hyper logical, so it's hard for me to just to speculate at all without some sort of basis. So yeah, it's kind of a double-edged sword a lot of times, but even in my personal life, I mean, that's how I handle everything. So
that's what I was wondering. Yeah, so it's not like you're not like, I wouldn't advise clients to do this, but I'm playing with it on the side because I'm kind of curious. You're kind of always thinking analytically.
Yeah. I mean, like even when I'm playing tennis, it's funny. I've been learning to play tennis the last couple of years, and but one of my problems is I'm just like hyper analyzing all the time. And my girlfriend is actually a really, really good tennis player. And she's like, you have, when you're playing a match, you have to stop thinking about your swing path and where your feet are. She's like, just play, she's like, stop thinking about it and just play. But I struggle with that. Honestly.
That's awesome. Like buying a car. You're like, Charles, it's a Honda Accord. Just buy it. You're like, well.
And I've got like 25 pages worth of research about, yeah, it happens all the time.
That's awesome.
So
while we're all sitting here, I was trying to find this article and couldn't find it. Although I know that I see stories that keep saying Goldman Sachs, JP Morgan, UBS are trading an ETP tied to something crypto on CoinDesk. So I know I think it's more speaking about it. I'm not sure if it's actually happened, so if I can drop it. But one of those things that's been really big is obviously Goldman Sachs and things like that. So, those big banks start accepting it and agreeing. I think we still have that issue of there's nothing really backing it. So there's still going to always be that thing, but there's excitement or something around the fact that everybody's just like, okay, fine. There's so much noise about this. We're just going to start using it.
Mm-hmm. Well, and and the thing about that is, I mean, if you look at the investment banks, and I mean, you kind of look back. I'm sure you guys saw The Big Short. It was like all of these like crazy, CDOs and all the stuff that they were buying. I mean, at the end of the day, they're going to do anything they can to make money, right? So, I mean, and one of the hot topics today is crypto. So it doesn't surprise me in the least that you're going to have a desk, at these places that they're going to start doing that so they can try to, make money off of it.
And the great irony is going to be the Fed's going to bail it out.
Then it's gonna be backed. Now it's gonna be a currency. You're right. That's how it's gonna happen. It's forced into society
It
by
was
Elon Musk.
I read an article, and it was on like one of the Fed's websites where they had a presentation, and one of the ideas about how to handle crisis going forward is that one of the criticisms is people, the delay in people getting stimulus money, like checks getting lost in the mail and stuff like that. And one of the ideas that's being floated out there is literally every single one of us would have an online account with the Federal Reserve. And so if they wanted to give us $1,500, that they could do it instantaneously. All we would have to do is log into our account and transfer it to our bank account. And I mean, I was like, holy crap, like that's being talked about, and we could definitely see something like that in the future.
Well, we could go down a million rabbit holes. I think, one thing I think about NFTs and blockchain technology. I mean, voting for one, we could all vote pretty easily from our phones going forward if the Fed wanted to invest time and money into assigning all of us things like that.
I said the world changes if you put that thing. If you make the capability of voting on an app, the entire world changes.
Mm-hmm.
Hey, we're getting deep now into our.
We're going off
hour two.
Bitcoin. I probably should blockchain. No, but I like it. I like the conversation. I appreciate your insight. It's nice to see how this is coming. And the thing that I always remember, especially from a CFA standpoint, especially from you, Charles, is that when you're thinking of Bitcoin, we're also talking to you from a perspective where you're thinking about probably, well, here's an individual with their life savings, and I would never risk something that I don't quite understand or hasn't proven itself to put it into that bucket of something that I would invest in. Is it something that could pop up in the future? And if you get in on it early and it happens, would be awesome. I would agree with that, but I feel the same as you, where I look at people and they're like, what should I could do? And I was like, look, man, I keep hearing it could go to 50, and sure it could. It could also drop back down to 5 before it does that. I was like,
right.
It's all over the place. It's unstable. It has to prove itself. So I just think I just think that's where we are. I appreciate your time, Charles, of you being here, answering these questions with us. Internet was super clean, crisp. Your lighting is spectacular, even better than mine. I feel like I'm in a cave right now. So I need to get more lights down here. But maybe I need to get an iPad, because you look like an angel, honestly. So I appreciate you being on here again, Charles Freeman. If you guys have any questions or want to talk to Charles about AdaptFirst, about his RIA, I tagged him in this post where you can see him, or you can message Charles. You can talk to him about his CFA capabilities. You can work with him on an investing basis in terms of that for you. So great guy to talk to. Definitely reach out to Charles if you have any questions at all. And thanks again so much for being here.
Good to meet you, Charles. Good talk.
Man, this has been really awesome. I really enjoyed it, and I appreciate the opportunity to come on and share some thoughts. So yeah, hope to do it again in the future.
Absolutely. Especially with your insight. I think it definitely, you're very technical, and I think a lot of, especially advisors, understand that. Some do, some don't. I know from talking, me personally, I know a little bit, enough to know enough, but not what you know. So I'll be appreciative to bring you back on here and get your insight, especially if this crash starts happening. I would love to bring you back on to say, this is where we are, this is what I see, and just kind of give a little bit of updates. That'll be fun.
Yeah, that'd be awesome.
All right, man. Have a great day.
All right. Take care, guys.
See you.
Little bit technical, a little bit in the weeds. But again, that's what you're going to get from a certified financial analyst. That's what you get. That's what they're there for. That's why they're here. And that's why we have people like Charles, who lives and breathes PE ratios for people like myself, who I think leads more into planning, more into the fundamentals, the operational side of where you should put things. And then when it gets to the nitty gritty of how we're performing, again, I understand concepts, but I really lean on the expertise of somebody like Charles to handle that. I just don't feel like I can be an expert in both places.
Yeah, I really appreciated him saying that there are some opportunities or things that he sees in the equity space that still have that are still worth holding and being invested in. You know, the value stocks being one. Just because I never liked the binary on or off. Like, you know, you and I have talked about this, but you get someone who's like, I just totally pessimistic about the whole thing. And it's like, well, for 18 months, this thing's been roaring and you've been sitting where? Like, you can't earn any yield in the fixed income market anyway. So where do you park your money? Like, so I love not having that binary on and off switch.
I know people for a fact or advisors online who have said on LinkedIn, it's okay to jump out of the market. You never know when it's going to happen. And I know for a fact they jumped out probably before March. Now, Mike, and I know friends actually who I've spoken to. And then my question is, when do you get back in? You know, what's your decision that gets you back in?
Yeah, you're scared now.
Now we're at a new high is now, or do you wait for the inevitable? And that's when it gets really difficult. Again, that's why I lean on, again, somebody like Charles, really lean on fundamentals and things like that, just because of those issues. And it's hard to plan. It's always about time. And that's why, you know, I would lean more like Charles, where I'm overly cautious. You know, I'm managing my grandmother's money. You think I want to talk to her on Christmas about why it got cut in half because her son put her in the S&P 500 ETF because I thought that was going to recover eventually? There's just things that we can do that I think are smarter for people to prepare. So I try to at least try to do that. But again, really lean on the knowledge of an expert who sees these things to open my mind just to things I'm not thinking about. You know, where it's blood, sweat, and tears of people's money that we have that we're holding on to. And I would not be able to sleep at night, you know, if I did something to hurt people. So I'm making sure I know what I'm doing.
For sure.
Cool. Appreciate you guys being here. Stuck around for a full hour. Thanks so much. And I know, again, I love to have Charles on again. If you guys have any questions, reach out to him directly. Awesome RIA initiative. Really fun to be there. Really great guy to talk to. And even if you just want him from a CFA capability, you can talk to him about that. LPL guys, he basically replaces the MWP. So think about that. And that's pretty much all I have. Got to go get some work done. If I don't step on Kajabi, that's never going to happen. So I'm more than happy to look into those prices. I know you're already doing that, Corey, but I got to get on this new member website, or it's just not going to happen.
Yeah. All right. That's totally off the record. Off the record.
Yeah. This is way off the record. We got straight into business and daily activities. This is daily marketing habits.
Yeah.
There's your thing of today. You know, stop watching the show and go do something important like I should be doing right now. All right, guys.
Awesome.
See ya. Have a good weekend, and we'll see you Monday, 9:30, like always.
Good shit.
Yeah, that worked out well. I'm really glad that worked out well. It was super clean during the it was funny. We did go off the record, but it still was kind of the show. And then I just kind of transferred. The productivity of today was bouncy, but that's okay. I don't know what happened. We've only done a show every day for the last
the production
4 months.
Yeah, you skipped the intro.
I skipped the intro. I don't even know how that happened. I have never skipped the intro, which I'm surprised about because I would expect myself to do that more, honestly.
Awesome.
So anyway, there we are. And now we're really off the record.
Something I'm really thinking about. The internet is just starting to really exploit or propose new opportunities to people, like blockchain, the new thing with the NFTs, the non-fungible.
The rest of the world caught up quickly, right?
I just feel like there's so many ways to invest and make money right now, outside of your traditional kind of ways.
100%,
that
100%. Nobody should just be making money at their job anymore. It's just not a thing. You should literally just be like, I have an idea and this is where it should go. Like, here's where I place it. this platform, this idea, you pick one. I don't know. It's like that. That's why I'm so big on marketing and branding and anything. I feel like we could just sell shoes. Let's start selling shoes. You just figure out where to go, how to do it.
There's so much all of us have to offer in these unique little spaces that people want to consume and buy and be involved in. It's just crazy.
I completely agree.